Today I'm here to talk a little bit about interest rates and what makes them move up or down. So you may have noticed that the fixed mortgage rates have been going up and down like crazy, while the variable rates have just sort of stayed the same, no real change since the beginning of the year. So what's the difference? Aren't all interest rates at an all-time low, so they should all be sort of heading upwards? And on the other hand, why are the fixed rates and the variable rates not going up and down at the same time? Why is one volatile and the other is reasonably steady? So I'll tell you the difference between the two and also where to find that information. Fixed mortgage rates are actually based on what the bond market does. So if you think about a 5-year bond, if you were to invest in that, whatever that rate does, if it goes up or down, then the 5-year fixed mortgage rate will soon follow. And this is also a reason for the volatility. Since bond rates can change every single day, they can go up and down, and depending on what people want to invest in, if they suddenly feel that everything is insecure, they want to invest in bonds, bond rates are going to go up, and then your 5-year mortgage rates are going to follow. There are 1-year bonds, 2-year bonds, 3-year bonds, all of the varieties in there, and those individual changes will affect the 1 to 5-year mortgage rates. Now the variable rate, on the other hand, is not based on the bonds at all. It's actually based on the prime lending rate. So each individual bank and each individual lender will set what they call a prime lending rate, just the basic rate. And they don't just pick this number out of a hat, they actually base it on what the Bank of Canada sets as their prime lending rate. Now that means that the Bank of Canada is free to change this rate up and down. However, they've got the entire Canadian economy to think of. So they've got the goal of improving the economy. Also, any changes they make may negatively affect the economy. So you have to be very conscious of any changes that they make, which is why the changes for the variable rate, the prime lending rate, are consistent. They're thought out for a long time before anything happens. And usually we kind of know there are a lot of indicators whether it will change or will not change months before it does happen. So if that's interesting to you, or if you want to know where to see the charts and the graphs for each of these, then give us a shout here at Finder Financial Services. We'll be happy to help you out. And also click on the side here to subscribe to our YouTube channel, and you'll be notified of the next video when it does come out. Thanks, and talk to you next time. Bye-bye.